And everything's different today. Everything looks different today. Everything, I don't know what to make of the world. I'm lost. I'm confused. And what am I to say? I'm just gonna drink some more of this delicious cold brew that I keep in the fridge here. But
Is
we've
it
got.
banana co-ferment? Is it banana co-ferment?
You're never gonna let that go, are you?
I hope it's not, because that sounds quite terrible.
So okay, so
See,
let me tell
see, I
you.
have.
Nikki,
See, this is what we need. We need to expand our realm because I need someone else to advocate with
Voice
me
of
of why
reason.
that
Yeah, we
sounds
got
horrible.
another adult in the room.
So it's okay.
Sorry.
Cameron's making it sound like I shoved bananas in my coffee or something like that, and that's not the way it works. The way it works is like there's a lot of modern roasting techniques for coffees, and because coffee is a tropical fruit, it's a cherry. It's called a coffee cherry. It's a tropical fruit, and those that tropical fruit is dried and roasted. But it's fermented, and before that happens, and as part of that fermentation process, there's all different kinds of techniques that are used. So there's different washings and so forth. One of the techniques it's used is called a co-ferment, where while they are fermenting the cherries, they will put in other fruit to ferment along with it, and that fruit is of course discarded at the end. But then you get some of the flavors. So one of the things that's done is a banana co-ferment, where they literally have banana in there as well, and so it does bring out some of those more tropical, more banana-y notes. It makes a very delicious coffee that I don't want to drink every day. Because does that make sense?
Forever. Yeah. I mean, I just want to be the person in the room that was like, you know what we should do now? We should add banana.
We should let bananas rot with our rotting coffee beans. Yeah.
Good. I'm gonna let you have that one.
It's fine. This is a single origin from Mexico that I got at World Traveler. Definitely recommend
Favorite.
them. Yes,
Love
exactly.
World Traveler.
They're awesome. Great coffee shop support. Well, by way of introductions, this is our weekly startup reality check, formerly known as Office Hours, also known as an Ask Us Anything, also known today as a guest speaker episode issue event for the Traction Lab Venture School. So that deserves a little bit of introductions. Things are going to be a little bit different today, although not really. We're still here to answer your questions. It's just that, Nikki is also here to answer questions. So we'll let Nikki introduce herself in just a second. I'm sure you were prepped for that anyway, but I'll give you those few moments to either prep further or panic in your head, whichever makes more sense to you. And then and so we have a little bit of a different structure. So in addition to there being three of us here to ask questions, and we still, of course, will take any questions you guys have in the chat. So you can drop those in the YouTube chat on the side menu or in the LinkedIn chat comments down below. Just throw in there. We're happy to answer your questions. You can always submit a question in advance if you want a little bit more breathing space. We got a few of those. You go to jdm.bio, hit the calendar, and then submit that there. And as I've been saying for 6 months, soon we'll move that over to the Traction Lab website when a Traction Lab website there is. So with that, but this is also a special crossover that we're doing with our Traction Lab Venture School. So for those of you who aren't familiar, the Traction Lab Venture School is one of the programs at the Traction Lab where we work alongside early stage founders to help them create a repeatable engine of growth using science and a bunch of evidence-based processes as well. And so as a little fun thing for them, we've decided let's bring in Nikki to offer her glorious expertise, which again, I will let her speak to in a moment. But instead of just relegating all of our nice TLVS companies into the chat, we've allowed them, as they want to be here in the studio. So if they have questions, we can just bring them on screen and they can ask them. And if that's something that you might want to do, then hit us up and we can chat about that as well. But for those of you who are here in the studio, if you've I'm assuming that means that you've got a question. That's great. We'll just take them in order. But there's a little private chat that's up there. You can just use that to let me know that you have a question, and then we will bring you on screen. So I think I see Jessica's already got a question and so forth. So cool. But before that, Nikki, good friend of ours that we've known forever, super happy to be collaborating with again because it's been a minute. But for those people who don't know who Nikki Sims is, who the heck is Nikki Sims?
Okay, I'm going to give my quick elevator pitch on my background. I was an operator for 11 years at a health system, primarily focused on building and then scaling different lines of business, mostly focused in same-day healthcare execution. And then after that, ended up going into a biotechnology company where I focused on doing something very similar for isolated cell manufacturing and apheresis clinics. We were working in a private equity transaction, which is where I caught the venture bug. So after that organization went into venture capital, which is where I met these two lovely folks that are on this call with us today, and focused primarily on fund operations. So the back end of funds, really studying valuations and kind of the boring administrative stuff that people don't know about, and also supporting founders with what their journeys look like, how to build and scale their companies with all the previous learnings. After a few years of that, was asked to come back to a large healthcare organization to do similar work, really optimizing their portfolio of healthcare clinics and trying to figure out how we can optimize success in that space. So that's where I am today. I also advise for a few funds still, and work as an advisor for Tech Futures Group, which, plug for them, offers free advising services to founders through the SBDC.
Well, thank you so much for joining us this week. We promise it'll be a good time. And if
Always.
not, yeah. Well, I
thought she was going to say
on,
she met these two hooligans. I thought that was where she was going.
Hooligans. Well, I was looking for the right word.
like, she's not wrong. So at TLVS this week, one of the things that we spent a bit of time breaking down was how investors evaluate startups, and not from like the portfolio context or from any of the like the portfolio math, none of the vehicles, like leaving all that aside. How do we actually like with an eye toward like traction and evidence and like viability and potential and all of those types of things? Like how do we actually do that? So we put down super detail. I imagine that there's gonna be some bias in the questions towards some of those things, which is one of the reasons we're super pumped to have you here with us this week. It's really great timing. But let's rock and roll. Let's do some questions without further ado. So I noticed Jessica has a question. So I'm just gonna let her do her thing. Hopefully that was vamping long enough for her not to freak out and panic when I click the button, although it looks like her camera's off. So let's bring mystery box. Whoops, that was the wrong one. They reorder just like Zoom. Isn't that fun? Let's see.
Nothing like testing it out live, you know?
Yeah, let me go back here, go to there, go to there. Okay. It's a little bit
there we go
on my small monitor.
Hi, Jessica.
Hi, Nikki. Thanks for being here.
Of course.
Meet Nikki. So what you got?
So I am in a ag tech startup, and it's basically the industry is not digitized at all. And so my question is, for a workflow digitization SaaS company in a historically offline industry, what early traction signals matter most? Revenue, usage, or workflow standardization?
Well, as you were asking that question, I think I want to start by the customer profiles you have. So I think early traction from the beginning of this process for you is really going to be focused more on you being the expert of this field and digitization, and saying, I know all of the reasons why and all of the ways that you can digitize your company, and here's why you should care about it. And the traction piece is, oh my gosh, your customer really does care about it. Like from the first piece of that. If you've got that nailed down, then what does that look like? It's really about finding early adopters that are continuing to use your product over a period of time and then increasing that. So even if early adoption means that they're getting the product at a low cost or no cost, they're continuing to use it, and you're able to show that either it's in either way, it's supporting and there's some ROI for these guys that you can use to be able to continue to have that as a piece of your sales channel, or that they get to a place where it's very sticky and they cannot live without your product. Because if you can get to them for free and they can do this for a while, and then you have to turn on that paywall, if you will, that there's no way they can live without your product moving forward. does that answer your question? Because you had a couple of them in there.
Yeah, no, that was helpful.
right.
Thank you.
Great.
Jessica starting off with an easy one. All right, fine. Cameron, anything you want to add to Nikki's comment there?
Yeah.
No, I thought you nailed the, I guess, answer. I think the like biggest thing is like for us was, thinking through kind of the overall traction in terms of engagement is always a challenge, right? So it's like thinking through what the actual outcome is. And I love the approach of like being the expert in the space and not just purely from understanding the industry, but also like how that process flows and then your additive nature to say, this is how we're going to drive specific outcome. And so I think thinking through like, what is the, like at the end of the day, is it purely efficiency or what are they wanting out of that system working more effectively for them? So is it driving cost decrease or is it driving revenue growth, or is it a myriad of all of those things? And then what does that allow to do? Is that to them to reinvest in their business to scale, or is it that they have more resources to have a better lifestyle, right? And so I think understanding those things are key in terms of like how we unlock that ultimate value for them. So I definitely agree with
yeah. And as an investor, you would think, great. Well, if everything that Cameron said, if all of that is true, then they're going to continue to want to use and purchase your product, and the benefits from a revenue perspective will come over time.
So like if we just go one click deeper, and for those of you who on the TLVS side, if you have a question, put it in the private chat that you have a question, so I know to bring you on camera. For everybody else out there, we're still getting your questions. Drop them into the chats, and we got you, and we do have some pre-submitted questions. So if we have time for those, but just to go one click deeper, Jessica, like what are some of the challenges that you're running into with regard to this?
So I have a very niche market. So it's game bird producers. So it's going to be people that raise pheasants, quail, chuckers, ducks, like in a commercial operation. So they raise anywhere from 20,000 game birds over 1 million game birds a year. And these businesses are very they're very old school in the sense that they're still tracking all of their inventory and all of their client reservations with either a literal notebook or a spreadsheet or things like that. And so we have an app that basically tracks their inventory and their client reservations for them. And what we're finding is the conversations are going really well. There is a high interest, but the sticky point is that they're really stuck on their systems because they're busy. They're the janitor and the CEO. A lot of these are small businesses or family businesses even. So their help is their children. And so they really seem to be stuck on we are getting by just fine. Yes, we know we need to make changes, but just I've got too many fires to put out. So we're struggling to find an urgency problem. We really know our clientele. We know our industry. We know our clientele. We know our product is valuable to them, but we're having problems convincing them that it's an urgent problem that needs to be fixed.
So where we've seen some folks do this part really well is, I don't think this is a unique problem. There's a lot of companies that are trying to get these antiquated businesses over to the 21st century, and it's not going well, right? And there's usually two issues. There's probably more. I'm sure JDM and Cameron can pull them out, but it's that the switching for them is they're so short on resources that they just feel like they don't have the time to do it, right? And the other is it's quite terrifying because they don't know what they don't know about the space. If they did, then they would have already moved over. And so that education piece, and I think somebody said it in the chat, is you being an expert and continuing to give them value propositions and information as to why this is so important and can benefit their business will help over time. Especially as new family members start to rise up and they're used to these tools in those businesses, or in larger like government firms, for example, you get new leadership that starts to come through. You can shift. So companies that have done this really well have really worked on their content, like social media strategies or Substacks or whatever format that looks like, from blogs. Maybe blogs are a little older now, but getting to the customer where they're consuming their news, or information about what's new in service industry, and really continuing to flow content out there about why this is important and how it can help, customer testimonials, anything that says, wow, they really get it, and I'm not in this alone. They're going to support me because they're the expert, and I can't imagine doing this with anybody else. And that can only be accomplished through content strategies and establishing yourself over time as the person or the company that can do that type of work. No.
Okay,
And-
perfect.
What would
That
you
makes
guys
sense.
add?
That's where I think it's important to like bring in the diffusion of innovation, right? Is that like over like when that's like very true when we're talking about like the time scale of the company and market evolution, right? And so, and like there's like a positioning thing here that won't like ripen for quite a while until like the early majority and like the late majority start like really glomming onto this, which is great, because that leaves a lot of upside and potential there. But then that like shifts to, okay, so who is it right now that doesn't need the external pressures of the market, the industry, their peers, their bosses, and all that stuff that causing them to have that urgency? Who has the urgency without that? Who has that urgency internally to the company? And like, is there? Cameron likes to talk a lot about triggering events. Is there? What is their problem that's causing that urgency, and how can we identify the group of them that have that urgency now, so that we can continue to build on those, that 16% that are going to adopt, so that we can have that perspective already in market with robust social proof by the time these other ones, get the benefit of that external urgency.
Great point.
Perfect. Thank you.
Cool. So back to it here. For those of you on TLS and Jessica, I'm just gonna vanish you. Away. That was delayed. I did it when I hit the button and I thought it would go immediately away, but it just decided to like have her linger for 300 milliseconds awkwardly there so that my magic wasn't so magic. But for those of you who are now just hanging out backstage with us, if you've got a question, either let me know in the chat or just literally hold up your hand because I can see you. And then we will bring you on screen to ask your question. Otherwise, those of you out there in listener land as part of the Greek chorus, go ahead and drop your questions into the chat. Otherwise, we will take one of the pre-submitted questions that we've got there. I'm not seeing anybody throw their lot in. You guys are all just hanging out here, but too nervous to join the internet live stream.
Nervous.
I'm calling y'all out. Come on. We got Ethan, Keith, McCain, Brittany, Hussein, y'all's here. I'm calling you out publicly. All right, we'll take one question. We'll take a question, then we're going to come back and apply some pressure again. So here we've got this one. It's a pre-submitted question. This is a B2B SaaS company targeting freelance court reporters doing depositions and hearings. Okay. Fun space. They're at the paid pilot stage. They said that's the drop-down entry they picked. They say, okay, it's scheduling and transcript management for court reporters, 16 in paid pilots at $52 a month. I already have questions. $52 a month. They're using it consistently, no major complaints, but court reporting as a profession is dying. It's being replaced by digital recording and AI transcription. Our customers know this. One reporter told me in 10 years, this job won't exist. They're still working now and need tools now, but do we build a business with a literal expiration date, or are we being too pessimistic about AI replacing skilled professionals? The average age of court reporters is 55. Young professionals aren't entering the field. The writing's kind of on the wall here. So a sunny, optimistic question.
I mean, I don't know enough about the court reporter size of market, but I will say if you are working on a product that can be easily optimized by existing AI products, then it's probably not going to be something that is widely adoptable and venture backable. Another example is we had somebody that was pitching transcription services that were really well done for healthcare organizations. And the reality is something already exists. It's already sort of being built and it will be optimized by the time the company is off the ground. So it is it's a harsh reality, but if you don't have a clear differentiator of why your product would stand above any existing AI transcription device today, then, we might not have a large enough market to be a viable business. And we have to think about it this way, like you're going to spend so much money, your own and other people's, so many years of development and grinding, it's at least 10 to 15 years before an exit will happen at this stage. So you would have to really see that there's going to be an opportunity in that time frame.
I was laughing because when you drop things like it's 10 to 15 years before an exit, I think most founders are like, oh, I think you just like melted.
Sorry,
I just saw everyone hopped off the LinkedIn Live. So just sort of like, I quit.
I know.
But yeah, I just want to one thing that stood out of that answer, and one of the things we often talk about at the Traction Lab, was just you immediately hopping into seeing the size of the market. And so we have the 8 T's of fundability, and the first 2 are the team and then TAM, right? And so it was immediately how big is that opportunity, and then also recognizing what type of business are you wanting to build. If it's something that's not venture backable, then maybe the market size matters a bit less, in the sense of I want to have a lifestyle business and make a certain amount of money, versus if you're going to be raising venture capital, understanding the nuance of how big that market opportunity and your path into that market going forward. So just wanting to call out that we have an investor in the space and is seen many startups, and that's kind of just the pattern that we see is okay, here's a problem, how big is the size of that problem, and then kind of trying to extrapolate from there. So just wanted to call that out.
Yeah. I think the only thing I'd add to that, Cameron, is at the end of the road, whether it's, and I'll be more optimistic here, okay? 3 years, if something's really great and amazing and you build it really fast, all the way to 10 or 15, who's going to buy that product, right? And it has to be something that they can't build for themselves. So even though it's really early, of course, to think about exit strategies, ultimately everybody's goal in venture is to sell their company at some point, to become acquired. And so if you can't find any reasonable suitors for that, because it might not make sense, then that might be another signal, just something to research, look into.
Well, sunshine and roses today. I like it. Yeah,
I mean, I'm with the shredders. Come on, you're representing.
I didn't say you were wrong. And I don't have anything nice and positive to say here, because it is a space that's really ripe for disruption, and not the kind that's going to be friendly to something that's really focused on what was it, scheduling and transcript management. Those are going to be things that are fairly easily replaceable. So we see right now, if we just draw a parallel to the software engineering side. So the professional software engineers who vibe code, as opposed to people who vibe code, for funsies like me and Cameron. But the professional software engineers that do that, one of the roles that still isn't replaced really well by AI is that management and integration between all this. Somebody's got to manage all of this stuff, even if you have multiple agents coding on things. There's certain things that it does well, certain things that it doesn't, but that's still a gap in there. And so you could probably surf for a while, serving that role, but on the 3-year range, I'm a little bit bearish about that possibility. I think is the way that I would put that. And so that you have to really think about, what is this going to look like on a longer time horizon, and then is this something where you can use this to establish a beachhead and then pivot to an adjacent market that isn't going to be so easily disrupted, or are we just fundamentally building something that has a shelf life, which is unfortunate. All right, let's see. Okay, we got a few different questions here. We'll take one from the chat, and then then we'll go with Brittany and then Keith. So the question from the chat, let's see if I can throw this on screen without getting crazy. All right, from Philip. So Nikki, you're probably not familiar with Philip Mason, but Philip Mason runs a company called LilyPay, which is a B2B SaaS tool for funeral homes to help them offer flexible payment options like buy now, pay later for their customers. Okay, so And yes, Philip is a fellow hooligan, so I like that. Welcome, welcome as always, Philip. All right, so just
Welcome,
landed
Philip
our
the Hooligan.
Philip
Nice to
the
meet you.
all right. You said just landed our first enterprise agreement, a 227 location group. The dog caught the car. What are the biggest mistakes founders make when they go from SMB to enterprise rollouts similar to this? Specifically curious about the operational traps you've seen kill momentum right after a big win.
Mm-hmm. You've probably heard this from a few different people at this point, but over-promising and over-customizing are really big. Your team has a product and you're going to get a large enterprise agreement, which means you're going to be really excited about making this customer as happy as possible. It is going to be important to follow their feedback and like how your product could potentially be optimized, but be really careful about responding or reacting too quickly to that feedback. So I'll give you, a real life example of a client that actually, I knew it was a small startup business. I don't think the organization knew, and they got a large contract. It was a big deal for them, and we, as a large organization, would batter every day with these really quick. Oh, I just need you to also do this. Could you just add this one little feature? Could you just do this little thing? This is going to make my life so much easier. We will be so happy if you can just do that. And I'm watching this poor team on the other end like melt, and just have such a hard time figuring out how quickly they could respond. And then finally, one day I get this, can you please ask people to stop asking us for things? We actually don't have the team to be able to execute on this. It's going to take us forever. And now it's moved us away from being able to support our other clients, right? So large enterprise contracts are great, but you have to have a team to be able to support that and understand as the CEO and founder how far you want to go, and then how to really effectively roadmap enhancements based on that team size. So make sure you have some sort of a sales account representative, somebody that is in charge of making sure that that client is happy, that they're fielding their questions, concerns, responding for all of the little ticks and bugs that might happen at the beginning. And then on the other side of that, one or two engineers, depending on the back end, I don't know enough about your company, but that can really kind of roadmap and decide like, what do potential sprints look like if we decide that these enhancements are important? Do they apply to all of our customers, or is this something that we can do just for this specific customer? What does that look like within our organization and build? How does that affect our infrastructure? Try to think about those risks at the beginning, because if you do, you are better to set yourself up for success and be more proactive in your planning and not reactive to the customer who could literally just break your team.
I love that. I've seen the same situation like manifest a number of times. And it's like, it's first of all, like, Philip, congrats, because it's awesome.
Yes,
it's
congratulations.
It's an unambiguous, like, it's a win. It's great. It's awesome.
Yes.
But you did specifically ask about the problem. So, I couldn't agree with Nikki more. And like, to me, I like analogize it to gravity. It's like you bring in this massive account with massive dollars and suddenly there's gravity attached to it. And so all of our efforts end up getting pulled toward this one customer. And that can cause all the team problems that Nikki was talking about. In addition to that, it can also like have those long-term impacts on our roadmap and our ability to deliver when we don't know if we're just kind of shifting ourselves towards serving one company that's not the avatar of the rest of the companies that we can get, which then makes future customer acquisition just more difficult anyway. Mm-hmm. And so then we become a consultant company for for this one enterprise deal. And so we see that all the time, is because it's really hard to say no to them because they're so big and there's so much money on the table. We don't want to say no, but there's like that other side of the scale that I think we always have to keep in mind for that. So
Yep, absolutely.
It was awesome. Great question. Cameron,
Great
did you
question.
No, I think you all nailed it. I think the only thing I would add is like the repeatability of that process. And so when I hear like Nikki's answer, and it's like basically using the language we always talk about, is like that over customization component, like if you how do you then replicate that sale if the next enterprise customer wants something different? And so you're technically landing large contracts, but how do we then right size what that kind of offer is for the next enterprise client and making that a manageable process? Because at the end of the day, an investor wants to see your ability to have that repeatable, scalable process. And if it's like, oh, every time we bring in a new enterprise contract, we're going to have to do this large customization, that's a lot of resources that are not going to ultimately you getting to scale. So, but again, like I know we hopped straight into the pain point of like, hey, how do you like navigate this? But definitely kudos to you. And I know a key component is also that will spur a lot more of the lending component, which is the other side of the business model as well. So,
yeah.
Awesome. Great. Brittany, I'm going to go ahead and bring you on screen with my magic powers. Again, with a little delay. I'm going to have to get used to that delay.
That was better. That was a lot better. Yeah, that was good.
All right, Brittany, if you do have the ability to turn your camera on, that would be great. But otherwise, what do you got?
welcome to the show.
We are unable to hear you. Yeah, welcome to the show. Welcome on screen. But we can't hear you. You are unmuted, but I can't hear you.
You are the win. You have to be here to claim your prize. What's the? You have won a free trip to.
You are the seventh caller. Okay. You'll probably have to tweak your settings. So I'm gonna go ahead and bump you off for just. I mean, it sounds like I murdered you. I'm gonna remove you from the screen for just a second. Go to your camera settings and see if you can fix that. There's a little microphone meter that you can use to test it. And then Keith had a question, so I'll bring Keith onto screen now. And then after that, we'll come back to you, Brittany. And then I know you did put it in the chat, so we can always say it out loud if that doesn't work out. Keith, the floor is yours. Unmute yourself, though.
Hold on. There we go.
Hi, Keith.
Hi. Yeah, so I'm in a completely like non-tech world. So a lot of what we're talking about is a bit above my head. I haven't been in school for 20, 30 years or so. So I don't know. I feel like I'm in an MBA class. But the issue I have is, I know I'm going to be bringing a product to market, and I know I need funding to get it to come to life. I'm seeking support through crowdfunding, and I feel like I can do a pretty handsome raise, maybe a 6-figure. Some are saying possibly a 7-figure raise. But to get to a 7-figure raise, I'm going to have to invest a ton of money into meta ads. I've been tracking what my performance is on the ad spend. It's really like great. I mean, the customer acquisition costs are around $9. We think the average order value is going to be around $100. So the return on ad spend is really good, but I don't have the financial resources to pour the kind of money to kind of gaslight this potential audience of people. And so I'm looking for an outside investor to help me with that, and also to come in and accelerate production so we can get into tooling and get the manufacturing of the first run to satisfy any Kickstarter orders that we get in advance so we can ship by Christmas. So I'm kind of in this really critical point right now because I've got about a 6-month lead time for this product to get fully engineered and then manufactured and then brought over from China or Hong Kong. Mm-hmm. And so I have a couple of investors that I've reached out to that I'm in discussions with, but I really can't get anybody to lean in because I'm pre-revenue. I don't really have a handle on my unit economics yet. I have an idea of what the product is going to cost by comparison to some other products that have come to market before. It's a very simple item. The major cost is going to be in the tooling because we're building it entirely from scratch, but it's all basically like plastic injection molded parts. So the unit cost shouldn't be that high. So I think there's a lot of money to be realized down the road. But right now, I don't think anybody wants to dive in. And I don't know how to de-risk the investment any more than I've already done by promising them, hey, I already got this potential revenue stream coming in through a Kickstarter campaign. I'm willing to give you your money back at the end of the Kickstarter campaign to minimize your risk so you get your capital back, and then I'll give you some equity in the business. But I don't know how to value the business because it's really hard to tell how much it's worth. So some people have said go after like a safe note type arrangement, some convertible equity instrument. I don't know. I've never been in a situation like this. It's completely off like what some of the other people have been asking about with their digital software companies. I have a hard goods company, so I don't know where to go.
Can I ask what the product is in general?
It's a toy. It's a golf toy game.
Golf toy.
Uh-huh.
Game, not technology. Technology not associated with it's a hardware.
There is no technology in it, unless you can count the digital app, but the app is really secondary. It's a complement to the main thing, part of the go-to-market community building, but it's really just an item you would buy to put under the Christmas tree.
Okay.
A tiny golfer, like literally a tiny golfer.
Oh, like a little golf. Okay. All right.
Little golfer on a stick. Yeah.
I'll sort of lean because I think JDM and Cameron probably know a little bit more about the product. But one of the things that I would think about with being in your shoes is, number one, the difficult piece is it's raising 7 figures without the product in the market is it's some capacity when it's just it doesn't have technology build attached to it, is going to be very difficult, especially when it's a direct to consumer product. And so usually if you want to think about building something where you can slow build, maybe reinvest in your company and build something that you can keep the equity long term if you're planning on selling, there are different financing vehicles that might be more appropriate at the beginning of your journey. So whether that's friends or family funds that, or your Kickstarter campaign where you can gather some money to at least get the product manufactured and sort of get it out there, then that's a great way to start, get some early traction, figure out what your margin is going to be on those sales so that you can figure out like how to reinvest that money and scale it. If you're looking for venture capital dollars, it's a difficult place to be if you aren't actually scaling a technology at this point in time. Usually someone like yourself will use other things like loans once the friends and family piece has been exhausted to be able to continue to build the company and then do the reinvestment. So you get to a certain size in sales where you look at small private equity firms that then take a large piece and support with, they're not expecting to 10x their revenue. They're expecting to get a piece of your business over time, right? And then they can help you with strategic partnerships or mergers and acquisitions like down the road. But your standard like, oh, I'm going to get this much from an investor through a safe note and it's venture capital funding, that is going to be really difficult to sustain because the venture capital market is expecting certain level of returns that are different in a direct to consumer product than they would be in like a B2B SaaS product. I'll pause. Question?
Oh, go ahead, Keith.
No. Was that for me? Like, I mean, I get it.
Oh yeah. Yes, that was for you.
Yeah, I'm paying full attention. I'm just, and I'm not like super discouraged. I was thinking about, I've done everything to de-risk it. I've got a good go-to-market strategy. I've got traction. I've got 62,000 followers. I have a very enthusiastic, consumer base of people who are really ready to hop on board this thing. So I would think that everything is in place to sort of, bring that outside investor in. And it's not like, I'm not asking even for a huge amount of money, and I think the thing is like, I also want that other piece of it. Like I want that strategic advisement, somebody to be on the board to kind of help me build and scale and grow out the operations side of things with the shipping and logistics. I mean, there are people who want this thing overseas and they're like, I want to be your international distributor. So it feels like it's already being pulled in, but I feel like I could use some help from the outside. And I sort of feel like there's probably one or two people at most that I need that are just as enthusiastic about this, that have the money, that aren't afraid of writing a 5-figure check, but I'm not asking for 6 figures even. Like it's a tiny investment. So I don't even think it's big enough for a VC firm to even come in, because like some VCs don't want to come in unless you're asking for over $250,000 or something, right?
Yeah. Yeah. And in that respect, you can always look at bank loans if you don't have a friends and family network, or go to angels, that you can say, I'm just going to make up a number, Keith, because I don't know your number, but if it's $30,000 is the number that you're going to be asking for, because you know that $30,000 gets you at least enough products to build to generate this much revenue. Because if I got this much revenue, then I could reinvest that revenue back in and get more product built, right? And then you sort of start that flywheel. But it's kind of honing in on, like, if we could just get to this place where we understood how much money we would make from each unit and how many units we can become cash flow positive and be able to have margin to reinvest, then you can start slowly building that business model. So I would spend some time really kind of penciling what that might look like. Like, what is the number, right? If I had $5,000, I could build 20,000 of these toys, and then I could reinvest the money from those toys back in, and I only ever needed $5,000. I don't know.
Yeah,
Numbers.
no, I get it. That's why I was a little bit afraid to ask the question, because I didn't want to hog up too much time in this room, because
All
there's probably
questions
people
are
that are
good
more
questions.
deserving. Yeah.
So I think
No.
That's not the right way to look at it at all.
no, it's applicable to many founders. So it's an awesome question. The reason we have this is so everyone can learn from others that are navigating that process. And so I think two things that stand out to me was we demonstrated that there's a lot of interest. So like we have a growing following and things of that nature. Like I would push you to think of like, how do we turn that interest into what we'd say is like intent? So moving that into like actually getting people to say, I'm willing to pay for this thing. And then you can actually leverage that as more formal traction. So that being like, hey, I have a wait list of people that are willing to pay, $30 for this plus the $10 subscription for the app or something in addition to it. Because that'll be much easier to go to an investor than like, I have a bunch of people that are following and like interested in the toy, but not necessarily that they intend to pay for it. And I think one of those components that, like you mentioned, a gap you felt like you had was around the unit economics. And part of that is tied to if we do a Kickstarter launch, like the unit economics still won't ever, like you can only do a Kickstarter really once. And we don't learn anything about our actual go-to-market effort because we're not actually using the same strategy of how you would go to market and selling the product. And so I think if we look at it from the like, let's take our interest that we have on our following and gather sufficient demand, like a demand in that next kind of like tranche of like, here's what this actually looks like. I think you'll be better set to go to an investor. Or if you even have like a set of pre-orders, you can take that to a bank or a factoring organization and they'll buy those receivables to say, here's the upfront capital to help you in that process. And then now you reinvest that capital going forward. So there's a bunch of different financing options, but I think it's how do you go from like where you're at like a, an earlier stage of interest to then here's that next click forward of intent and actually willingness to pay.
I have like 2,000 pre-orders, but they're $1 pre-order reservations. So it's just an intent to say, hey, when the Kickstarter goes live, we know that these are the people who are going to jump in on day one, and you'll get the velocity on day one through all these people that are already aware of the product launch. And so then that sort of kicks on the community inside of the Kickstarter to kind of get it to become like a featured project or a trending project. So it's a model that was kind of created by this company called Launch Boom, and maybe people have heard of them, but I think it's a pretty smart design. But I know JDM posted something on LinkedIn about, hey, if you're going to pre-order something, ask for more than $1, maybe ask for $20. I mean, I think there were plenty of people that would be willing to pay full price for this thing, but I think it's dangerous because I'm not selling an actual item that's in production yet. So I think I cannot sell a unit unless I actually have like a product being built. So there's some legal issues there, I think.
So there's only two like guardrails here. One is the law, and the other is the market, and like those are only the two guardrails, right? And so don't break the law. I'm not qualified to tell you what that looks like, but don't break the law. But on the flip side, what a Kickstarter campaign is exactly that. You're collecting the money in advance of them ever getting anything. And there's like, as far as I'm aware, again, not legal advice, that's totally legal to do. And so like what's often being represented there is not a technical limitation, but a market limitation, is that customers just won't pay for it in advance because it's not really it and it's fake. And that can be real, right? And so that's why like you're not going to get anybody to use like the Cybertruck example is what people always do, which is very comical in retrospect. But because
pay full price without even knowing if the product's ever going to get made. That was the Tesla truck. Yeah,
that was the Tesla truck, and so it was going to get made, and it had a production date, but they put you had to put down $1,000 to get onto a list, which didn't end up mean like there's a lot of caveats that I want to put on that, and all of that is before it was basically a drone dumpster. But aside from all of that, like the real like the signal there is like you can't get somebody to pay 50 grand for something before it ever exists, years before before delivery. And it's not that nobody's going to do it, but the most people who buy trucks aren't going to do that. They simply can't part with that money that far in advance of receiving the value from that, right? And that's real. So then it's like, okay, so what is the strongest signal that we can get short of that? And so in this case, like the $1,000 becomes the example for that. Again, caveat, there's like 19 footnotes on my brief here that you'd have to see, but those are the only two guardrails, is the law and what people are willing to do. Is like, what's the strongest possible signal that we can get? Because what we're actually trying to do with that, to go back to connect to Cameron's point, is we're trying to get sufficient evidence that we can use to get somebody else to make a bet. And like that bet is going to be dependent upon the vehicle, which is what I'm going to connect this back to like Nikki's point, is that while Nikki, you said like venture capital, I think you're really just referring mostly to that asset class. It's like, somebody who's putting money in exchange for equity in a like traditionally venture backable startup is looking for those 10 to 100x exits. And like if this kind of product is really hard to do that, and so that might knock that away. But there are other vehicles that might be available.
That's right.
There are a number of vehicles that might be available to you, some of which are equity based, but are going to be a little bit, but they're not on like the venture capital side. They're not looking for that. They're also like the cost of capital is a bit higher because you have less potential for returns on that. So like for you, it's more expensive. But then even when we break down, like, there are only 8 ways to ever get money. Like most people don't know that, but there are literally 8. We can count them real quick. You can already have it. You can earn it. You can get grants and donations, which is another way of earning it. You can borrow it. You can trade equity for it. You can steal it. You can commit fraud, or you can print it. But those are the only 8 ways to get money. The right hand here. So again, not legal advice, but those are for the Traction Lab does not consider those viable options. So so for those other 5, like we can assume then you don't have it, and that so earning it can we crowdfund or do something else where we can actually deliver the promise of value, at least if not the value of itself, in order to get the capital that we need to capitalize. That was terribly redundant, what we're trying to do here. Or then it's like, okay, what can we do with equity? What can we do with borrowing? And so like equity is going to have a couple of different vehicles associated, or a couple of different paths associated with that vehicle. Same with debt, because you can actually do just a straightforward bank loan if there's a way that you can collateralize that, or if you have some revenue coming in, then there's SBA that's available to that, which doesn't take your own personal assets but only the actual cash flow into account with something like that. In your business history. And then there are others as well, is that you can get moneyed individuals who are not associated with a financial institution because of the promise of like that engine that you're gathering evidence for, that like with this, like the math that Nikki walked through a minute ago, like you can then say, okay, well, based on this engine here, here's where we can expect the returns from, something like that. And you can make that a bit more palatable as an option. So it's really about like, we need to figure out how we actually are planning to capitalize this. And then that's going to tell us what evidence we actually are going to need to convince that type of individual or institution to make that bet.
Yeah, I'm prepared to take on debt. I'm debt free. I have SBA loans available to me, but they're small dollar loans, And I think that I just wanted to get an equity partner in just to kind of like accelerate this thing, because I feel like there's a lot going on here. But again, it's hard to get an angel to take a bet on something. I think they're going to wait until I no longer need the money, and then they're just going to want to hand it out. You know, it's like, because I think this Kickstarter campaign is going to speak a lot, and I think it's going to change my whole entire outlook. But I'm just a little nervous about it. So I'll go ahead and like pass it back to the rest of the people that are waiting patiently. Sorry, everybody else who's been waiting for their turn. Thank you, guys.
Keith, don't apologize. It's a great question.
Absolutely. Yeah. Thanks for asking it. And like this, the minor reframe, you know, that I put on there is like what you're actually getting back from angels is the feedback that you lack sufficient evidence to warrant the bet. And so like that's where we want to reframe that to what is the evidence that we need in order to make that bet work. Because what you're not actually trying to get money to fund your runway or growth. You're trying to fund an engine that's going to make everybody money. And those are two very different things.
Yeah.
And so the latter requires evidence.
Yeah, that was well said, JDM.
Okay, so I don't know, Brittany, did your mic get working there? As I bounce between things here, we'll give that one more try. And then Nathan had a question as well. Whoops, wrong button. There we go. Brittany, did it work once? All right, still can't hear you, but you can try to fix that while I read the question that you dropped into the chat. And then no worries, it's new stuff. So this is what she said. I was recently advised that investors don't care about TAM or seeing the TAM on your deck. That's total addressable market for everybody else out there. What is your feedback on this subject?
I don't think that that's generally true. But you know, the tricky part about decks is that everybody has a different opinion about the deck. And so you're going to show everyone your deck and they're all going to have a different opinion about it. And then you're going to keep building it over and over and over. And it's going to be a labor of love that you hate, probably. The most important thing when I think about TAM is, number one, it doesn't matter if it doesn't apply to your product. So one of the things we'll see is a therapeutic that goes with a cancer drug. Okay, we'll use this as an example. That's okay, Brittany. And then the total addressable market size is the size of cancer drugs, right? These things are not the same. And so it's really important to think about exactly what your product is and how that TAM is going to apply to the product, and then also do a top down and bottom up. So if I can get all the sales, this is what it's going to look like. This is the total size of the market. But then how many of these things do I have to sell, right, to get on the other side of that? Like how do I double the math in both ways? So make sure it's defensible two different ways. We care about that. I think the most important thing, and Cameron talked about this earlier, is the market size has to be big enough for somebody to want to invest in it, because when you're continuing to build something, depending on how expensive it is, I'll give you an example. A company that wants to build a transcription technology for gardeners, I'm just making something up, it's a bad example, and somebody that wants to build something for a healthcare company, right? So one might take $5 million to build, the other is going to take $50 million to build, right? Depending on the compliance and regulatory and how deep the technology is going to go. So if we don't have enough customers and we understand how much it's going to cost for you to build it, and you don't have enough customers at the end that looks like you and us as an investor can keep an adequate amount of equity to make our investment worth what we've put into it and at a return level, then we might pass for those reasons alone.
Yeah, the only thing I'll add on to that is that there's like TAM is also often used as like a stand-in for the size of the opportunity, because it's one of the common way to measure it, right? As a proxy for the size of the opportunity. And so I think to the broader point, there does need to be evidence of the size of the opportunity if you're looking for a venture scale type play. And so like that's often done with a TAM. And so like somebody like me is one I absolutely hate TAM in a deck. And that is not to say that you shouldn't include it. It's to say don't include a dumb one. And that's mostly what people do, is it's just this number with a B after it. And they're like, this is our market. It's not even their market. It's like the size of their customers' market. And like, and it just right. And it just drives me freaking crazy. And so like, but if you actually have a quote unquote TAM slide that's actually a bottoms up approach to like drawing the market definition, that's doing a lot more work than just showing the size of the market. It's showing the size of the market with evidence behind it. And it's also showing that you have a strategy, that there's a go-to-market in place there. Like you have like there's a whole theory behind it, and we're given a reason to trust the number too, and not just like, hey, I found a number that, or ChatGPT gave me a number with a B after it, and so that's what I chose. So like, but I don't know how that landed with you, Nikki.
No, I think it's perfect. I always look for a bottoms up. If I can find a bottoms up, I love that. I think it's really important to be able to say, this is the total size of the market. This is the percentage of the piece that is applicable to me that I can capture. That's the piece. I think, JDM, that what you said about it being completely separate from reality is generally what we see in these decks. And so it really has to be focused on the problem you're solving for your customer. And it has to be built based on that, not based on what you found is the total pharmaceutical industry or the total toy industry, right? Like those are, the total toy industry is not your TAM, for just since we just had that one, right? Like we're very specific niche thinking about the customer who is going to buy it and what they are spending on toys like this, and whether or not they're willing to buy your toy, and the cost of your toy rolled all the way up.
Right. And the one last thing on this, like if you're doing like a bottoms up approach, then like one of the things that the SOM can be doing as part of that, right? You have TAM, SAM, SOM. One of the things the SOM can be doing that is pointing at your near term potential, like the 1 to 3 year time frame, which is all, because you're not going to get the TAM in that. And so like you can use that as saying like, we have, such and such evidence, which leads us to believe the overall TAM is this, but based on that same evidence and strategy, 1 to 3 years is looking like this, and that's our actual obtainable market in this time frame. And so you can actually, that ends up becoming a very valuable proxy as well. And this is where a lot of founders get lazy too, is it'll just be like, well, we'll start with California, and so California is X percentage of the TAM. We'll throw that number on there. Like, is there any reason like that we picked California, or just that we happen to live here, or like, does that type of strategy in any way? And like, what does that look like? And you're not going to get all of the California market, so we're still a little confused about like. So it just, the more that you can actually put thought into that, the better off.
Absolutely.
I mean, I think it's just the element of it all should be tied together, right? It's not just one slide that like stands on its own. It ties to your go-to-market strategy, which ties to your customer problem, your early adopter, how you're actually creating value. And then, with that is like, how do you actually scale? So I think oftentimes we like think of each slide as an independent thing, but it's overall, what's the story and flow of that connected piece of like the theory of what our startup is.
A great point. And it's often the last slide that you have the ability to put together, because you have to know all the things that Cameron just said before you can really put some thought into your TAM slide.
Yeah. All right. We have I think two more questions. Do we have a couple more minutes, or are we out of time?
I can do a couple more minutes.
Okay, awesome. We'll do a lightning round. So Mauro, I know that you have a question, so we'll bring you on camera in just a second. Nithin's video is delayed, so I'm just going to read his question out loud here. So he says, we want to automate computing workflows in biotech and are still doing discovery. We talked to bootstrapped and pre-seed company founders that offer a lot of time and effort and want to partner on problems. We have talked to a small number of later stage company scientists where we find that they have their own IT groups that they complain about, but they do have an in-house team. How do we think about the buy versus build decision in deciding who to target?
I know there's a lag. It would be helpful if we had a little bit more information on the company. Buy versus build what product? The IT tech?
So it's I'll do my best here, Nithin,
yes, please,
in advance for completely botching it in advance. But so this is Resilient Interface, and they're basically they're offering it's an AI-based tool to help identify new targets inside cryptic pockets. So it's actually a drug discovery AI tool. And so they've been having early like customer discovery conversations with some Series A stage companies. That's what he meant by the ones that are a little further along, I think. But it sounds like a lot of them, when they get to that stage where they even have capital to spend on this, they're maybe building it internally, even though they have like complaints about the IT teams that are doing that. There's still that build versus buy decision that his customers are having. It's like, how do you navigate that in an early stage like biotech company that's spending on software to help with their drug discovery?
Yeah, it's a good question. Number one, I think startup companies, there should be some value proposition to be able to say, hey, we need to buy this technology to be able to support us with this new pathway or product if we're looking at optimizing through AI. But it's really hard to bridge that gap if you don't yet have a product. So what happens in organizations as they grow, and when you're at Series A, it's still a little early, but they have to really start thinking about quality and regulatory components of their business, especially if they're biotech. This is where they are knee deep in it. And oftentimes, not knowing or not having this product that has been tested and is secure, the thought of bringing something like that on, it poses a huge risk to these organizations because there isn't trust there yet because the product isn't there. So I think that is going to create some challenges. I don't know anybody that, whether it's buy or build, that doesn't complain about IT. Everybody complains about IT because they don't necessarily understand it, right? It's very different. The scientist world and the IT world, they're very different languages, and the translation between the two is always going to be a challenge. But when you are looking at this type of customer, creating a factor where they will actually change their behavior is going to be very specifically linked to ease of doing it, and then how strong your regulatory components are for your product, because any risk could cripple a company of that size. And they do not yet have the internal infrastructure like larger organizations to vet your technology before it even enters their company.
Cool. I think Cameron and I can chat with Nithin offline, so we'll leave that standing with your glorious expertise. And then Mauro, sorry, I accidentally kicked you off again.
Hi, Mauro.
Hello. No, I would have a question, but it would be too long now at this point. I would need to explain my entire business model and then ask you advice about it. I think it's not the time to do that.
Well,
give us the lightning.
Yeah,
pitch
lightning.
Well,
lightning
start
pitch?
with the question, and then let Nikki ask.
Yeah, how about that?
So start with your question.
So we have a lot of ways to reach the customers. The first more directed, the one we did so far, is just direct reach. To give you a context, we use AI to read the construction blueprints, and then we create a digital model. And to the customers, that is the framing contractor in this case for buildings, we provide an app and physical tapes that they contain the layout of every component. They are stapled on each component, and this allows the construction to be very smooth. I mean, we built with this technology, and it was amazing how faster the framing contractors were able to go. So that's our product. So we actually reached out, or even customers that they just through the website they saw us and contacted us so far. But there are several ways to scale the model, and one is it would be through inspectors, like framing inspectors. Those are the people that they actually go on site and inspect the skeleton, the structural part of a building, for example, a custom home. And of course, they are not allowed to take a referral fee legally, but we can use them as advisors. And we can use former inspectors potentially to actually create a partnership that is a little bit more solid. But even just as an advisor, I noticed that when the inspectors were coming at our jobs, they were actually very intrigued by our technology. So just sharing it as an advisor and giving as advisor can help to spread the word, I would say. So that would be one way. Another way is, first of all, let's stop it here. So what do you think about this potential strategy, which is relatively new? We didn't know to do this before. And how could be structured to be legal? Because obviously we cannot really pay directly a fee.
Yeah, so let me try to repeat back. So your technology is something that inspectors are really excited about. And so you would love to kind of work with them on being able to use the technology or have them as a customer, but there are obviously strict rules around that, and you want to make sure that it's completely legit before you use that as a channel. Is that right? In general, like high level. Yeah. Okay.
The inspectors, they can never be our customers. Our customers are always the framing contractors that build the structure. But the inspectors, because they are public officials, they are not allowed to recommend the products directly, I guess. I mean, I'm not super sure about this. Just I learned a tiny bit about it. But maybe you know more about it. I don't know.
I would too, I think I would step back a little. You're super early in your company journey, right? And I think it's great. It's a great market signal that inspectors are like, wow, this is really, really cool. I would focus on meeting your customers where they are. That's a great signal that it's important, but I think if that is not your customer, probably focus on where they are. Construction conferences, I think there's a lot like union meetups, right? Where they have these types of workers. There's unions in every city, different locals. They throw parties, they have, events, they have vendor events. Like these might be things that might be helpful to just really focus on your customer. This pivot, if you're even questioning, well, it's not my customer, and also it might be a little risky, just stay away from it and continue to focus on getting as much customer adoption as you can early on, and focus on these like sort of larger, different, sales channel strategies at a later time.
All right, sounds good. Thank you.
Yeah,
I don't want to take more of your time, but
thanks,
it was helpful. Appreciate it.
Yeah.
Awesome. Well, thank you for asking a question there. We'll put
so delayed.
It was like
it's so delayed.
There's like 3 different things that happen. Like you push the thing, and then it has like a little toggle switch slider, and that animates. And then there's the image goes away. But all 3 of those happen at a different time. And so, like I feel like
I would never be the Vanna and be like, it's JDM. I can't even try.
I'm just here to humiliate myself so that y'all don't have to. So thank you very much to the TLVS people for hopping on backstage. Perk of being a part of the Traction Lab in some ways that you can hop on to office hours sometimes and ask your questions backstage. And if that's of interest to you, definitely hit us up. Big thanks to Nikki for joining us this week and offering your expertise and taking the load off of us a little bit. Really happy to have you here for your expertise. It was awesome.
Thank you for having me.
And then lastly, I'll say before we just kind of end all the things is we do have next week. It's the 30th. If you are watching this asynchronously, we have our High Conviction Happy Hour, which is one of the quarterly offerings from the Traction Lab. It's an free event that you can go to where we get a couple of startups to come and present what they're working on. They give a little pitch and then get absolutely destroyed, but with love, from our Traction Lab review board, which includes some investors, some operators, and Cameron and myself, who all understand the evidence-based side of things. It can provide you the kind of feedback feedback and advice and criticism, again, with love, that due to the social constructs of the pitch, you won't get directly from the investors that you're pitching to. But it's open to anybody who wants to come and join that. So we'll put the link to that down in the various chats and in the show notes. So check out the High Conviction Happy Hour. We'd love to have you there. We're doing that at Connect Lab / Aggie Square on the night of the 30th. So that'll be super fun. Cameron, always fun to hang with you, dude.
Yeah, thanks for having me as always. But no, thanks Nate and Nikki for joining the two of us. So it's so good
Always.
to spend time, and you hop right in and do as we always do, just diving into startups. So we really appreciate you being a part of the discussion. And I think, certainly Sharif's content there is key of just, super helpful session for, I think, all that were engaged. So appreciate the time and energy.
You're always welcome.
All right.
Anytime. Fridays at noon. You ever want to come hang with us? Come hang with us.
Oh, it sounds like a blast.